The BigBear.ai Holdings Inc. stock, trading on the NYSE under the ticker BBAI, is currently sitting at $6.79 as of the market's close, representing a significant one-day jump of plus 18.91% or plus $1.08 since the prior session's close. Now, the common expectation for a stock that's just popped nearly 19% is that this is simply an AI hype-driven spike, maybe a delayed reaction to positive market sentiment around competitors like Nvidia stock, or a small cap simply catching a wave. But the real story here, the piece of insight that truly matters, is not just the earnings beat itself, but the nature of the accompanying announcement, the company's definitive agreement to acquire Ask Sage. This isn't just a technical beat and raise. It's a capital allocation play that confirms a strategic pivot, leveraging their recent capital raise to aggressively expand their intellectual property footprint and product offerings in a way that suggests a greater focus on their high-margin software business, which is a key long-term driver for any technology stock. That acquisition, which is expected to close late in the fourth quarter of 2025 or early in the first quarter of 2026, positions them to capitalize more effectively on the anticipated government AI spending surges we've been discussing, creating an expectation versus reality dynamic where the market was expecting a gradual government services business, but the company is signaling a move toward a more defensible, proprietary software platform business. The general belief about BigBear.ai has always been complicated, rooted in its history as a SPAC merger that brought several defense and intelligence-focused AI firms together. For a long time, the stock was viewed as a high-volatility, low-margin government services contractor that happened to use artificial intelligence, which is a dramatically different prospect than a pure-play software company. The market's expectation was a bumpy ride, prone to the whims of government contract timing and funding, often evidenced by the stock's wide 52-week trading range of $1.65 to $10.36. This volatility keeps a lot of traditional investors, perhaps those comfortable with the stability of Fidelity or Schwab Intelligent Portfolios, on the sidelines, forcing BBAI into the more speculative or self-investing category often associated with platforms like Robinhood. However, the third quarter 2025 results, a net loss per share of minus $0.03 on revenue of $33.1 million, beating analyst estimates of minus $0.05 per share and $31.82 million in revenue, begins to challenge that established view. The company is, for now, successfully managing the expectations of a complex, services-heavy business while planting flags in higher-margin territory. The underlying reality is that the positive surprise isn't about explosive Tesla stock-like revenue growth. Revenue actually decreased year over year. The real positive comes from narrowing that net loss, even as they ramp up strategic investment, a classic move to position for future scale, not just optimize for current profits. This suggests a management team that is prioritizing the balance sheet and strategic future over simply appeasing quarterly expectations, an important distinction for a growth stock. Analyzing the recent stock movement, this nearly 19% single-day pop is a direct and forceful reaction to the earnings news and the Ask Sage acquisition, but it also highlights the stock's inherent high beta characteristic, meaning it moves with greater magnitude than the overall market. The trading volume today was substantial, indicating significant institutional and individual brokerage interest driving the price action, moving it well above its 200-day moving average. This volume suggests that the news compelled both short-term traders and some longer-term investors to act immediately. The institutional ownership structure, which includes major players like Vanguard Group Inc. and BlackRock Inc., has been shifting, with many institutional holders increasing their positions in recent quarters, suggesting a quiet buildup of conviction that a corner is being turned. This institutional activity, which often precedes sustained moves, contrasts with the typical narrative of a stock driven purely by retail momentum from online investing platforms. Even as some analysts caution that the stock is a wait before loading up, the price action reflects a deeper conviction on the part of capital allocators. This dynamic highlights the tension. The public narrative is AI meme stock, but the money flowing in from institutional sources, who utilize complex data and fundamental analysis, says strategic consolidation in the defense AI sector. It is worth noting that while the revenue declined by 20% year over year, which is the stick in the mud for the narrative, the company is citing project delays from a government shutdown as a primary factor, an external pressure point that is a known risk for any company heavily reliant on government contracts. The backlog, however, remains strong at $376 million, providing a significant visibility floor for future revenue, which is critical for mitigating the volatility that can scare off a potential Fidelity Investments or Interactive Brokers trading platform client. BigBear.ai's core business model is centered around providing mission-ready AI-powered decision intelligence solutions, primarily to the U.S. government's defense, intelligence, and national security communities. They fuse artificial intelligence with domain expertise to turn large, complex data sets into actionable insights for high-stakes, real-time decision-making. Their work falls into two main segments: cyber and engineering, and analytics. The analytics segment, which leverages their core AI/ML platform, Observe, Orient, Dominate modules, is the higher-margin, more scalable part of the business, while cyber and engineering provides the underlying professional services and systems integration. Their 2021 public listing came via a merger with a SPAC, Gig Capital 4, a financing vehicle that often leads to increased scrutiny and volatility in the subsequent years, which has certainly been the case for BBAI. Historically, their dependence on a few large government contracts, particularly within the Army, has created lumpy revenue recognition. Past performance has been mixed, with a focus on integrating acquired assets and building out the commercial side of the business, which was bolstered by the earlier acquisition of Pangiam, an entity focused on vision AI for travel and security, signaling their intent to diversify beyond the core government customer base. This history of aggressive acquisition and capital raising, including a $337 million stock offering mentioned in the recent highlights, is a clear signal that the company views consolidation and scale as the fastest route to profitability and defensibility in the crowded AI field, a strategy that echoes the early growth days of companies like NVIDIA stock. The ability to execute on these integrations is the single biggest operational risk moving forward. Looking ahead, the future outlook for BigBear.ai is framed entirely by its ability to transition its perception from a government services company to a scalable proprietary software provider. The expectation is that the government contracts will stabilize revenue, while the reality of growth must come from the AI platform and commercial expansion. The Ask Sage acquisition, which focuses on agentic AI capabilities, is a massive potential catalyst here. Agentic AI, which allows systems to perform complex, multi-step tasks autonomously, is a high-demand, high-value domain, particularly in the national security and regulated industries where BigBear.ai has deep relationships. If Ask Sage's technology can be successfully integrated and deployed across their existing customer base, it offers a path to increase the value and stickiness of their platform subscriptions, boosting that critical gross margin figure which currently sits lower than pure software peers. A key opportunity is the long-discussed acceleration of government AI investments, potentially driven by new legislation and increased defense spending in 2026 and 2027. BigBear.ai is strategically positioned with the security clearances and deep domain knowledge to capture a significant portion of this spending. However, the risks are substantial. Integration of the acquisition is a complex task that can divert management focus and capital. Furthermore, competition from much larger players like Palantir, as well as emerging well-capitalized startups, remains intense. The company needs to show continued margin improvement and a clearer path to positive adjusted EBITDA, a figure which was negative in the third quarter, to maintain this newfound market optimism. Their full-year 2025 revenue guidance of $125 to $140 million, while reiterated, is still modest for a company with a market capitalization now approaching $2.5 billion, reinforcing the notion that the stock price is trading heavily on future potential and successful execution of this strategic pivot. This brings the story full circle. The expectation is an uneven, government-dependent growth path, but the reality the company is selling is an aggressive, capital-fueled platform expansion into the most advanced sectors of AI. For individual brokerage users and those learning how to invest online, this stock represents